Join the Ungovernables. No filters, no apologies. This season, we're cracking open Uniswap governance. Welcome to a new episode of the Ungovernable Podcast.
Hey, everybody. Welcome to a new episode of the Ungovernable Podcast. Today, we are joined by Guillaume Lambert, who traded lab coats for liquidity pools. From quantum biology to DeFi, we are going to explore a little bit about how deep science meets deep finance. We are Joe and Austin of Alpha Growth, your premier DeFi operations and growth firm. Guillaume, thanks for being here.
Hey, thanks.
What else did everybody know about you?
No, exactly. Great intro. I was going to say that I left the puns and the background so succinctly said about my my previous life for sure. But yeah, I used to be in academia. I used to be a biophysicist. So quite different than finance and governance and blockchain. But yeah, here I am.
What was your main focus? Did you have an against the grain thesis back in the biophysical world?
Always. So I was a physicist by training. So I did my undergrad PhD in physics, and physics is very broad, and we're a bit arrogant in this way where we think, all right, we know all the problems, we can figure all of them. Let's try to solve biology. These guys don't know. So a lot of folks have this constant battle with what we physicists think is important and what biologists think is important. It both of them are important, but we again, I admit, we are a bit arrogant and approach things in a slightly different way. I was studying antibiotic resistance. I was using microscope to look at cells. I was looking at single cells as opposed to like trillions of cells in a test tube to try to extract differences, for instance. So it was definitely fun, definitely something that was technologically advanced. And that's why I guess, again, I was able to use my physics training to do that. But it in a weird way, and then we can touch upon that later. But the research I was doing, which was in biophysics, statistical mechanics, some math involved, but the math that you use to describe a molecule moving in a cell or how populations can interact with one another can be applied to finance in a weird way. So diffusion, all of these, the math is the same, it's just different topics. So whether it's a electron moving around or a molecule in a cell or price getting pushed around by traders, it's all the same math in a weird way. So maybe also with some arrogance and say, all right, I'm going to fix finance, but it is the same tool. So it's a bit more natural for me to apply the math that I've used in my past life to finance. In that case, Uniswap options, all of that.
So tell us a little bit more of that pivotal moment. When was the time that you left the physical world and went into the digital?
It was, I was always at the forefront of technology and research. So at I started in 2017. I think CryptoKitties was when it went on my radar. And I said, this looks cool. And then again, I think I sired and bred a few CryptoKitties. And then I stayed on for the fun and maybe the idealistic view of changing finance, and from 2017 through the bear market, of course. But I was kind of dabbling. I was starting even assistant professor. I wasn't even out of academia yet, but just the same way I would keep up with science advances, technology, then blockchain seemed like a cool thing to look at. I knew about Bitcoin, but it wasn't as exciting as, hey, let's create some CryptoKitties. And I was a user of MakerDAO, of Uniswap V1 when it launched. I deployed a few pools myself, type of thing. So it was a transition, and with COVID, with 2020 being, I was at home, I was remote, I was teaching remotely, so could not do research, so as a summer project almost. But through 2020, 21, I was delving a bit deeper. I was able to be a better LP in Uniswap V2, and then when V3 emerged in 2021, and the white paper first, but also the real protocol, I kind of sat down and studied it from almost like a summer project, like a bit more math perspective. And that developed, but it wasn't a clear moment. I was just a lot more excited with the advances of DeFi and finance than I was with the pace of science, which is extremely slow when you compare to it. So at some point I said, okay, two curves, one is going slowly, but had years of head time. The other one is going much faster. There is some level of transition, but yeah, I would say that officially I was out of academia in 2023. So between 21 and 2023 is when I kind of made a jump, I guess.
So I'm kind of curious, which one do you feel is a little bit more chaotic, the molecular world or DeFi?
this is also something that even DeFi or core development or protocols, I come from the world of science where you say, all right, I'm going to do an experiment that's going to validate my thesis. And then you have a hypothesis, you do the experiment. This is a scientific method, but it's not like that at all. 99% of the time, you're wrong, stuff breaks, you have no idea what's going on. When I see some of the fights or arguments we see in DeFi or in even Ethereum or blockchain development, it's human pushed. So you can change it. You can actually have a say to it. You cannot say, no, I want the mass of the electron to be different. No one's going to listen to you. You just have to play with it, to live with it. Similarly with my view is that I use Uniswap v3, v4 now. I go with the flow a little bit more, trying to not reinvent or change what exists, but rather take it to the next level, which I'm sure is coming from that previous experience of science. But I would say, back to your question, lot more chaos, lots more uncertainty and doubt in science for sure. Tokens, coins, it's actually very easy to understand, in my opinion, compared to everything else that you can do in science.
Oh yeah, and I feel like you can jump in the deep end with DeFi, right? Instead of going through that meticulous process that could take months or years. You're like, all right, I'm going to get into the nitty gritty and just launch a protocol over a weekend and see what happens.
Yeah, the feedback loop is much more quicker. And when you're doing science, again, I was at Cornell University, like the level of science that you do is charting new territories. So there's no textbook, there's no reference. You're writing a textbook as you go along, more or less. So it is definitely much more difficult to kind of exceed the speed at which you can innovate. Whereas, as you say, writing code, even LLMs can help you write code through it, but you can actually create something that is a little bit more quick and rapid turnover than what you see in science.
Yeah, it all moves quickly. I'm kind of curious, Guillaume, what do you tell your kids that you do? So I feel like talking about options in finance can be pretty difficult.
Yeah, he said tokens are really easy to understand. So how do you explain it to your kiddos?
I mean, my kid, I have a 2-year-old and a 5-year-old. So now for them, it's, can we play outside and can I try to climb as high as I can on the table and launch myself forward? So that's, I don't even tell them about tokens. I will evangelize them later when they're a bit older. I mean, when I tell my wife is a cardiologist. She's also quite, again, grounded. She doesn't show up one day, people could die type of thing. So that's kind of the stakes are different, but she gets it. She sees I am enthusiastic about it, but then when she meets her colleagues, she's like, yeah, I'm when I meet someone that know me, I'm like, blockchain's so great. And then she's like, he's building a platform to trade options on cryptocurrencies. And people say, oh, okay. Takes 5 seconds to explain it, while when I try to do it, I have some trouble misjudging, like what level to take there.
So on that note, let's double click into what exactly that is. So cryptocurrency options on the blockchain. What is Panoptic?
Yeah. So this is again, fruits of many years of efforts, but at the end of the day, it's taking over the LP side of Uniswap v3 and v4. So LPing, most of you may have been an LP, or you see like people do it on crypto Twitter. People had the main narrative that it's impossible, people lose money. But if you look at it long enough and hard enough, you realize there's a lot of analogies between LP positions and options. So we can dig deeper, but the key point is that we're taking over the LP side of Uniswap, trade LP tokens as opposed to trade the underlying tokens themselves. But if we trade these LP tokens, you can create options payoffs. So it's a happy accident, almost like a cheat code that we unlocked. I'm sure Hayden and even those that do research on AMMs had no idea they were creating something like that. But at least our thesis is that LP tokens have this weird nonlinear property. You can lose a lot, you can earn a little bit. It's so weird, but if you look at it carefully, it's like selling options, and selling options is difficult, but at least we know the tools and the playbook for selling options. And with Panoptic, you can sell options. You can do it on leverage. You can do it with more returns, but also you can buy options, which is shorting someone else's LP token. You can open the two-sidedness of the market, not just sell something, but also buy. People may be used to buying options with GameStop or options or calls on your stocks of choice. It's kind of making the whole options landscape complete buying, selling options, the beauty is that it's integrated into Uniswap in a way that is almost too easy in some ways. As I say, I go with the flow. I didn't want to change Uniswap V3 how it works, but say, all right, this is what we have the hand we'll dealt with. What can we do with it? And yes, options. LP positions equals options.
Okay, I do want to understand a little bit more about that, because I think fundamentally I understand what you mean by they're similar in risk profile, right? But explain a little bit more about how an LP position and an options contract can be looked at in the same, like you said, nonlinear return and risk.
Yeah, and if you go on our website, app.panoptic.xyz, we try to show it very visually. So I personally think in terms of payoff curves, linear, it's like your perp, and then you have the curviness of a covered call, an option, and we show this. It is simplest as we can say is that you have a LP position that has a range. Above the range, you're 100% USDC. So there's no payoff, your cash. So payoff is flat. Below the range, you're 100% ETH. So you have a 1-to-1 payoff with ETH exposure. You started maybe 50-50, but now below your 100% ETH, 100% USDC on top. You have some curviness in the between, but that's kind of the main feature of, again, a covered call. You have upside, capped potential, profit potential, downside risks, which is you holding the asset or the stocks. And just that simple observation that below its ETH, above its USDC, somewhere in the middle, it's continuous, so we don't have to worry even too much about it, means that the payoff is like an option. The premium you get, the fees you get is another story, but just the fact that you have a complex instrument that has a covered call like payoff, you might as well say, all right, let's treat it like a covered call.
Okay, now do derivatives such as these, is it fair to call these derivatives?
It's a more physical derivative.
Okay, a more physical derivative because it's more correlated because it's actually representative of liquidity instead of a synthetic.
If you do futures contracts or even options, you can print a long and a short, and CME, all of these trading, like the brokerage firms allow you to do it if you're a market maker. You can print. You don't need to have the assets. You don't need to have barrels of oil sitting in a warehouse. You actually can print these contracts because you close them. You make sure that you get rid of them to some extent.
Which is kind of how the short squeeze happened with GameStop, right? It's because they didn't actually, those shares did not exist that were being shorted. Okay, so how does this contribute? How does Panoptic activity contribute to price discovery of the underlying assets?
Yes. A lot of what we see, so DEX space has its own rules and centralized exchanges have a different one. So if we focus only on decentralized exchanges like AMMs, Uniswap, the more trading there is, the more fees are generated for the LPs. And if you have a lot of liquidity in a Uniswap pool where everybody puts the liquidity in the same range, it can act as a buy or sell wall, but there's more dampening. 1 ETH purchase will move the price less if there's a lot of liquidity. And if there's almost no liquidity, a 1 ETH purchase can move the price, 50%. So when you sell an option, you move liquidity in Uniswap. So selling an option requires you to have the tokens, or creating an LP, requires you to have the tokens, moves liquidity in the Uniswap pool, dampens the price action, decreases volatility. And if someone were to put $1 billion worth of liquidity in Uniswap V3 or V4, then that would be the driver where all the liquidity will be traded there, whether there's centralized exchange or not. The bulk of liquidity will be where the profit is because there's the most liquidity. And if you don't do that liquidity provisioning, selling options is in thin air. It's not affecting the price at all. It's secondary. Again, options are traded in Chicago, stocks are in New York. It's two different markets, two different locales. Here, selling an option or GameStop style, people bought call options. Someone had to sell them. But in that case, selling those options would impact the price and the volatility directly. And that's kind of the physical nature of it. Lots of selling means the price moves less, volatility decreases. And if you want to buy an option, this is where the unlock that Panoptic allows is that you can short an LP token. This is weird, but you remove liquidity from Uniswap. And then you had something that was 50-50 ETH USDC. You remove it, you unwrap its content, you say, I'm going to sell the ETH, get back everything USDC. You remove liquidity, it's not there anymore. So buying activity now reduces liquidity, makes the price more volatile. There's less liquidity to be kind of backstopping the trading activity. So buying options now also impacts the volatility quite clearly, because you can decrease the liquidity that's available. The seller that sold the option still gets paid. The buyer pays them the fees that would have been collected, but because now there's more liquidity, they pay them more than if no buying or selling were to happen. So that is kind of the clear missing piece, if you want. If Uniswap LPs feel like they don't earn enough fees, a buyer will be buying cheap options. And from the math and the probabilities, if you buy options cheaply, you'll make money in the long run. The more buying there is, now it can get more expensive, but that's kind of the missing piece. You need the other side of the balance to, yes, fees are low, now buyers make money. If fees are too high, sellers make money. And you need these two actors to kind of stabilize the market.
Gotcha. So it's almost like it balances it in itself while using more of the range of liquidity in a traditional like V3, V4 contract.
Yeah, and the liquidity that sits in V3 contracts, it can be misdeployed. You have some pools, I won't shame any protocols or teams, but you have liquidity out of range. It's likely the tokens or like the stuff that they didn't want to keep, but price went down, liquidity is out of range, you're stuck. You don't even want to touch it. Whereas if you think about this in terms of options, you could move that liquidity. You can buy that liquidity that is out of range. You can relocate it near the range. You can actually now be a bit more efficient in how liquidity is distributed. And also, if your option is out of range, maybe if your liquidity is out of range, there is a trade that exists that can make it closer to the range without necessarily burning it. So the liquidity distribution as well is guided from LPs trying to optimize time in range, maybe from their choice of range, like upper price and lower price. That's one way. But if you deal with in terms of options, now we have the volatility, the buying activity. You have more parameters to kind of that can enter into the formula for the entry point. In that case, you are being more efficient into where the liquidity is deployed.
And so how are you seeing traders use Panoptic today? Like, what's the primary use case?
Yeah. So we've launched in December. We're on mainnet. Quick announcement. We're launching on Base later this week. Mainnet is cheap for fees, which was fine. Who knows? Sometimes goes up, but then fees on Base and layer 2s are definitely more retail friendly. So we'll launch there. A lot of what we see on mainnet is selling activity. LPs that were LPing already in Uniswap, or new option sellers that have a good understanding of selling options that are now doing this on Panoptic. There's a little bit of buying activity, mostly on the call side, meaning people are bullish ETH. It went down so much. People said there should be a turnaround. So a lot of calls queue. This is one thing that you can see in the options world, but a lot more buying of calls, whereas put buyers would have made bank over the past 3 months, but that's fine. It's hard to predict, but lots of call buying, lots of selling options. I'm personally not an LP, but one thing as an LP you can do is you can buy options as well to cap your risk. It could be a risk management tool as well. Not buying for speculative purposes and going like 100x on a meme coin, but buying one or a few options on ETH/USDC can help you offset risks for kind of the whole market tanking in a way. You have ETH token A, ETH token B, ETH token C liquidity positions. One single ETH/USDC target can offset some of your losses if the price of all tokens were to go down with respect to USDC.
Gotcha. So like essentially for LPs, it's like a way to manage risk. And then for traders, it's a way to possibly leverage and make more money on those opportunities, whether it's through are the traders mostly doing the put options or the
call options, which is you make money the higher the price goes.
Yep.
And a call option is the right to buy ETH at say 1,500 when the price is 2,000, 3,000, 5,000. So you buy it cheap. You can either keep that cheap ETH or sell it in the open market and make your money. But yes, a lot of folks that are speculating are mostly buying ETH token on the way up.
Oh, that's interesting. So why do you think they're not buying like puts?
The bulk of activity you see in most like ETFs and kind of large underlyings, there's put skew, which is the other side. And this is for hedging purposes. You have a fund that contains like millions of dollars worth of assets, some Tesla, some Amazon, some treasuries, a bunch of different stocks, and you can buy one or two puts on the S&P 500 to hedge your risks in a way. That's how options are used in TradFi to some extent. Hedging, managing risk, buying insurance, and you trade the most liquid one, which is S&P 500, that if your Amazon and Apple stocks go down, S&P is probably going to go down all at the same time, so you make money on that kind of hedge. This is different than what we see in Ethereum land, but that's fine. I would say that the people that are owning meme coins maybe don't care about risk. That's why we want to see it.
Totally true.
And
well, I feel like the market kind of moves together as well, or at least traditionally has been for the crypto market. So it's hard to, cover your risk because you're still going to be in a bad position either way.
And that's the thing. I personally am exposed to ETH mostly in my LPing and my trading, but then I still think in cash at the end of the day. So you can have one or two trades that offset that overall exposure. So even though if the whole market of altcoins, Ethereum goes down, you can make money hedging correctly on ETH/USDC. Or if it goes up to some extent, we're finding new use cases. Another one that we're thinking about a little bit more is that if you're lending your stable coins, you go on, could be Morpho, Aave, Euler, all of these lending protocols, you lend your stable coins. Maybe ETH goes back to 5,000. You lose out on that upside in a way. You had stables. Yes, you made 10%, but you lose out on the 2-3x that could happen in these tokens. So one strategy is you can hedge the other side, which is, yes, you have all of your kind of net worth in stables, but you buy a few call options to kind of see the upside of having no exposure directly on the downside. But yes, if the price were to moon, you do have an extra yield. Could be like 10% of your net worth is on these call options that would now pay off. And if price keeps going down, you lose the premium you pay, which is kind of de minimis compared to the price there.
Guillaume, is it fair to say that Panoptic allows traders to have safer leverage? Is that a fair way to put it?
Yeah. Again, the crypto ecosystem, when you tell them leverage or risk, they don't bat an eye, and that's fine. But yes, the primary use cases for options, whether it's a bank or a fund or anyone that holds a sizable amount of stocks, is for controlling risk, managing volatility. The funniest thing I see is that, oh look, all of these hedge funds underperformed the S&P 500. So we hear this all the time. If they put all of their money in the S&P 500, yes, they would outperform 99% of the hedge funds. That's not the goal of a hedge fund. It's for folks that have a lot of money. They don't want to see it go down. So on the downside, hedge funds, I would imagine, would overperform especially this year, even if the S&P 500 were to go down. It's dampening the risks. And you want to be going up to the right, maybe less than the S&P, but the pullbacks aren't affecting you as much. And that's kind of the story of options. They were used for, it started in Chicago because a lot of agriculture, lots of unknowns whether the weather is going to be nice, the harvest will be large or plentiful. You secure a price, you limit the risks, and then you have some certainty that you pay. Okay, I'm going to pay a little bit to ensure I can sell my corn at this price, type of thing. And if it's true, of course I can. Or if it's not, I can sell at the market price and kind of let that option expire. So controlling risks is, I'm a bit older, maybe that's what I focus more than going 100x on the perp exchange. That's what suits me as well.
And is Panoptic offering more accessible and actually cheaper exposure to these versus just a conventional buying an options contract on ETH versus can I have that?
So if you want to buy options on ETH now, I'm sure maybe, I don't know, if you're US based, you cannot do it anywhere. You need Deribit is the most liquid one venue that allows options. They block US users. It's through the ETF. So Bitcoin ETF, you can buy options on Bitcoin on the ETF. I traded as well on my TradFi account, I guess. But ETH, unless there's an ETF with liquid markets, you cannot do it. So we also block US users, I guess. But the key point is that we can offer options by tapping into the existing liquidity in Uniswap, but we can also do it for medium to long tail assets. The Uni token, it has a Uniswap pool, it has healthy volumes. The options market falls off kind of as a bonus almost. All the DeFi tokens, stablecoins, single point pools, these are kind of a bit more boring, more range bound, but it's a market that you can opt for options. Meme coins, Pepe. We traded some the Milady Cult token. So we traded some of those, some options on those, and extremely volatile. As a seller, you make the most money, and that's kind of one way to also get exposure on the sell side. But yeah, the beauty of Uniswap was to democratize the listing of tokens or stocks. We can do the exact same thing with options. So I'm not sure people will buy puts. Maybe they will puts on all the DeFi tokens, but now we can do it in a way that is permissionless.
That is awesome. Okay, now how is Panoptic adapting to V4? How is Uniswap V4 changing the way that you guys are thinking about it and the way that the protocol operates?
Yeah, so we were building for 2 years before we launched, working on V3 because it was the only one live. We launched in December and then V4 came in earlier this year. We were able to convert our existing code base, which was kind of audited, vetted, lots of work, blood, sweat, and tears, to work on top of V4 in addition to V3. And we don't do any hooks. We don't do anything that is specific to V4, but we can work on top of any hook pools. We can work on top of any pairs, could be vanilla as well. That was the first step. Even the hook wars, I don't know if this is, but it's still unknown what hooks will gain the most traction, what's the best and worst ones. Yeah. And this is going to be iterative. And then we don't compete at this level yet. We just allow any hooks to be served by Panoptic. So any hook builder here, you can get an options protocol on top of your hook pool for free with Panoptic.
Is there any use cases for those hooked pools that you have in mind or maybe thinking about and playing around with?
Yeah, so the existing ones, a lot of what I see is trying to solve LPs problems and kind of trying to make it more, there's more profitable for the LPs. Okay. One thing that happens is that this means that options will be a bit more expensive if LPs in general earn more fees. Buyers will be paying a bit more, but it still works. There's got to be a different market equilibrium. So I wouldn't say that I want to bet on a specific market or a specific hook, but rather we can serve all of it. And what seems like, oh no, they're redirecting some fees away. That's fine. That means that the buyers can now buy so cheap that eventually they will buy enough that is on par with what you get with the other pool. So I'm actually happy with this decision because maybe our V2, maybe our next iteration will tap and lean into the hooks infrastructure a bit more. But now we can let it play out with the V3 pools and the V4 support as well. So base now that we're launching has the main flagship one is going to be the ETH-USDC V4 pool, for instance.
So Guillaume, you've hinted in the past that leaving money on the table, or the LPs are leaving money on the table, right? And this market equilibrium that you just alluded to, the yield has to come from somewhere. This additional revenue has to come from somewhere. And so who in your mind is going to be taking on that burden?
Yeah. So again, we can touch a couple of directions, but with Panoptic, if you want to say, I want to increase the returns for LPs, you don't need to change the fees, the trading fees. So traders can pay the exact same fees. And a simple solution, you have a dynamic fee that reacts to trading and that flows value to the LPs, but more trading fees may mean less trading volume. It's really wrong. So yes, one thing that we are able to see is that traders pay the exact same fees. Value is brought in by speculators and risk managers that buy options. They have a totally different pool of funds. They buy insurance in a way that inject money into the Panoptic ecosystem so that it doesn't interfere with the swappers because they see the exact same trades. And the LPs also get, a large fraction of their fees from these swappers, but they have a supplement that's coming in from that buyer. And buyers may have a totally different outlook than a speculators. Options buyer that will hedge will have a totally different outlook than the speculators. So they may even be happy to pay a bit more for protection so that they can sleep at night. And now that flow of funds can flow to the LPs directly from that hedging use case that the buyers can get.
Would you say that it also protects against impermanent loss, or is that like an unfair statement to make?
No, exactly. The impermanent loss, it's a very well-known concept in the world of options. It's something that any beginning trader has to deal with. Any even funds, they have to deal with what we call impermanent loss. They call that gamma risk. You sell an option, the covered call example, you're still exposed 100% to your underlying if you're kind of directionally wrong, and you have to deal with it. And the gamma risk that you face as an options trader, you have tools at your disposal to do this, to solve this. When you do it only in Uniswap, if you look, and some solutions to now buy options, or at least use options to hedge, but yeah, now with Panoptic, it's all in the same place. But the problem, quote unquote, of impermanent loss is at its root only because you can only sell options, but also only sell covered calls. So covered calls have this payoff, and it's limited. You always have exposure to the downside. Your meme coin, your DeFi token, ETH going down means that you are always exposed on the way down, unless you short the underlying or you do something else. But as a option traders, yes, you can sell an option, buy another one to cap your losses. And instead of having 100% max loss, you have maybe 10% because your option protects you. So buying options that are maybe wider than your initial position or slightly offset allows you to control gamma. It's not getting rid of impermanent loss because it always exists, but then it controls it. And that's kind of we pushed an update to the UI where we show the gamma risk to some extent. And it's a concept that's very well known in options trading in TradFi. I'm going to try to push this for LPs, but the gamma exposure of your option is what you want to hedge. And whether the impermanent loss something else is kind of a transformation of that principal risk.
Gotcha. And I love like your site too, because it's so easy to see like where you are exposed. I feel like a lot of other options platforms, you're just kind of shoot in the dark. And unless you're really a pro at how to navigate it, you just kind of seem lost from the get-go.
Yeah, I mean, I can claim that even our UX is better than the TradFi experience. You go on Robinhood, it's for the buy side is actually okay. You see the P&L, but even the Greeks, there's a bunch of stuff that you have to know that's not clear. So we feel like we put a lot of efforts in to make it so that you see with your eyes what you're exposure to, and you have maybe 1, 2, 3, 10 positions. We show you the combined payoff of all of those as well, that you don't have to worry about 10 little different kind of underlyings, but now you have one global position. You hedge the impermanent loss of that global one. Instead of buying 10 options, you buy just one. So it makes, this is again what hedge funds and quants do, but this is how we make this accessible to Uniswap LP, but also traders here in DeFi.
So how do you guys, I mean, these are very complex, and you've kind of touched on some of these, the Greeks, and we don't really use these terms a lot in DeFi unless you come from a TradFi background. It sounds like you guys have done a tremendous job on the user experience, user interface, but how do you guys go about educating users? What do you think has worked well? What has not worked well? And how can we learn from that?
Yeah, so even internally, I'm used to trading options. We have a research team that does research full-time, 2 people doing research. We used to publish this on Twitter only. Now we do a live show where we discuss kind of that week's research bite that we call. And this is a good way to discuss these research topics. The last one we did was a back test. Would you be better off buying puts or selling calls? And these two are making you money if the price goes down. But it turns out that buying puts on Uniswap was cheaper and made you more kind of return in a way. So research, hard data. I don't even know half the time what the answer is going to be when you do these back tests. So we just have to look at the data on the chain, which is easy to access. So that's a good thing. And as I said, internally, I was talking about this with the research team, but a lot of folks had even no idea like how to trade. So what we've done over the past 2 months is that I'm doing 3 live shows per week with Rosalie, who's on the marketing team, and she used to be a meme coin trader and said, I'm tired of losing. So I'm teaching her how to trade options. And we've done those ticker Bitcoin trades or ETH and BTC, and she's actually trusts her guts, and she's actually right quite frequently. So again, she's not obfuscated by the math and the data and the technical analysis. It's just, how do you feel Bitcoin's going to do? And then again, we frame it so that it's high likelihood of profit. You make less money, but you're right more often. But it is a skill that can be taught to anyone. You don't need a PhD in math to some extent to understand this. And that's the research show that we do. It's small a little bit on the Tasty Trade show, which is a TradFi platform that teaches people how to trade options. We do a similar thing. Rosalie is on vacation, so starting this week, I teach someone else on the team that used to be in Uniswap LP, and I'm teaching her how to now hedge her LP positions on Panoptic, how to transition from being an LP only to LP and Panoptic as a way to hedge her position. So to some extent, showing by example, and people send me Twitter DMs and I answer, and I'm actually very active. But yeah, we broaden the reach. Class 101 type of thing is also another way that we make sure we get. And yeah, some people have questions and you can answer them live as well, so which is good for them.
And of course, your background in academia, I think, probably doesn't hurt your case with your ability to make complex topics.
The level of preparation that you put in a class compared, it's like each hour of class you have 4 hours almost of research sometimes, and I was teaching like grad level class as well, so you have to kind of put in the work. So now, without saying it's easy, but it's easier. I just have to ask really what's your assumption on Bitcoin? Bullish, bearish, neutral. All right, okay, so we can actually create a trade that matches her assumption. So yes, it's fun. I like it a lot.
That is a lot of fun. Not only do I want to participate personally in some of these classes, because I think there's a lot that I could personally learn, but I also think this would be a very, very powerful thing that we can share and co-market from the Uniswap side, because I think a lot of Uniswap users would probably say that they're not more than 50% comfortable with being able to trade options and understanding the purpose and the reason why these instruments exist and how they can help you become a more prudent and smart risk-averse trader by also being a degen at the same time.
Exactly. And if you're an LP, some people say, all right, new meme coin drop, let me be an LP. You get a lot of fees. This feels good, but you have to have some management as well. And you're also selling options, but then naked options in a way. And that means that you can be quite exposed. So even the LPs, they are kind of missing the toolkit. It's like a Swiss Army knife with like one or two tools missing. You don't have the full gamut of what you need to be successful. And yeah, I think the degens, whoever is trading perps and trading coins and looping with Pendle and farming points, they are kind of primed for understanding options. Options is going to be easy for them. They have to know how to loop through all of these kind of hoops to
and you used some funny vernacular there, naked options. Now, is that just if I am to sell an options contract and I don't have 100 shares in my own name, basically?
Yes. Naked call, naked put. So yeah, when you trade options, whether you're a hedge fund, as you say, you can print money out of thin air almost, but you still have to have some requirement. The bank, to some extent, doesn't allow you to. Same thing with GameStop. They probably had a few $1 billion worth of dollars here. That was enough to back some GameStop calls. They lost all their money, but at least they had the money. Same thing with options. Even if you don't have the shares, we allow you to borrow, maybe tap onto leverage and sell a call option, even though you don't have the underlying. And we have a buying power requirement that matches that risk. And if you were to trade in your IRA account in TradFi, it would be all secured. You won't even have access to leverage. You have to have the cash or the assets to back 100% of the losses. In Panoptic, we made a decision to allow this leverage to take place. We allow people to borrow funds. We'll allow them to get 5x leverage in a way. So we do give them you have 1 ETH, you can borrow 4 more ETH from the protocol to trade options with. Of course, the liquidation, there's risks, but that's how you can be a bit more capital efficient. Again, leverage is not always inherently bad. It means that you can be more efficient with your capital. And the way I trade is that even though I have 5x leverage, I use 2, maybe 2.5, and don't max it out. And that's how you can, now I effectively trade with, again, 100%, 150% more capital. That is in Uniswap using other people's capital that I borrow to act with it. And if I do get a loss, then it's my funds that are getting seized. But at the end of the day, I can be more capital efficient with other people's capital that they don't have the ability to do it with.
So traditional options markets have been generally gate kept. And first of all, Do you agree with this? Do you think that this is directionally correct? Or do you think that this is just a tactic to give institutions more control of the markets? Or is it genuinely designed to keep the retail investor safe?
I think it's not designed to keep the investors safe. You can buy IPO stocks, you can buy a bunch of stuff. And they even make it like, anyways, long story short, I won't go on a tirade again, but I do think options allow you more financial control, but they allow you to control risks. And of course, if you don't educate, and it was from like 60s and 70s, no one knew how to educate the retail user base, which was kind of mom and pop, like doing some investments. They blocked them just because, all right, you're going to lose money, you're going to sue the SEC, it's going to be bad news for everyone. Now it's accessible. We have people spend more time learning, more generally, but learning about anything that you want. It's easy. And what is the current barrier of entry is how much money do you have? And any Fidelity or Schwab or E-Trade account is, if you have more than $250,000, oh yeah, of course, go lose your money with options, that's fine. But if you have 25K, no way. You have to almost lie and say, yes, as a trader, I have 25 years of experience trading options. Let me have this 25K account be enabled, I guess level 3 or whatnot. But yes, I would say that it's a bit archaic. It's a bit something that we see in DeFi, opening the doors, allowing people the control of their finances. But as you hinted at, institutions use options. They have access to this hedging, risk management. It is a useful instrument. And if you don't give it to people that want to control their finances, then they kind of have it like a much higher uphill battle than if you allow them to do this. So I'm on the sell side, which is doubly more risky, but it's not out of reach for anyone for sure. But same thing with buying options. So when I say you can hedge your losses by buying long dated options, you don't even have to day trade. You do this, and then every month, maybe every few months, you can roll or adjust. It's easy. It's much easier than kind of these swing trading that you see with stocks or spot.
So pivoting slightly over to Uniswap specific around governance, especially, you had an idea for an alternative use case for the fee switch. You remember this?
Yes.
Tell us about this and whether or not you still stand by this idea.
Yeah, so this was V3, and V2 as well had the fee switch code. So this was a signal saying it's there. And I'm also of the opinion, back to my science background and even Murphy's Law, if something can happen, it will happen. So if shit can happen, it can happen. Same thing with the fee switch. I feel like it is there. The best way we can find a use case for it is, okay, let's look at it. And not necessarily to see future token flows for token holders, something that's very, very complex, but rather the fee switch will be on a per token basis, which is what it is. It's going to be the protocols or the teams launching that token that will turn on the fee switch. And the rationale is that now you can have a fee switch that allows revenues to go for that trading to the protocol itself. Maybe a little bit goes to Uniswap, but the key point is that you don't have to print as much tokens as you had during DeFi summer that we saw, where we had 400% dilution per year. You have the trading activity that's there. You can guide users. You have some ETH, some tokens. You can actually have some revenue source as a protocol that launches. And that could guide more traction, guide the incentives. And you can say, okay, whoever goes through our process gets their share of the fees. But if you have just-in-time liquidity, mercenary LPs that don't go through that entry point of being with the protocol and with the incentives, then they don't get their share. So I don't know. I'm glad you read it. At the end of the day, it's just one of those things where even me as a protocol founder, maybe I'll do this. Actually, it would be a great idea to have, if we have a Panoptic token, I want to get control of the incentives. I want to make sure that the LPs are rewarded properly. And I don't have to wait for Uni token rewards, but I can say this is the Panoptic and ETH that is skimmed off of the LPs. But if you're LPing in protocol, maybe on Panoptic, but you'll get back that amount type of thing.
And I feel like it makes sense too, right? Like you're kind of bribing protocols to bring their liquidity and keep their liquidity over.
in Uniswap.
With Uniswap, yeah, rather than going to another DEX, like let's say Aerodrome, where they have their like flight school and they're able to bribe LPs to essentially reward them. So, I mean, it does make sense in theory.
I mean, if I'm Euler finance to some extent. I was a token holder. I'm glad it went back up, and then they are in crushing it for sure. But yes, maybe they want to incentivize their token holders to win there for the long run. And yeah, I could be an LP with these tokens as opposed to doing nothing. And if I do it on LP, I feel like I'm kind of without any protection. So yeah, I mean, that was what I thought was the best, most straightforward use case for maybe not benefiting Uniswap directly, but benefiting protocols. But as I said, could be a part of your ETH that you collect, and that piece goes to Uniswap DAO or some way to grow the market share. As you say, Aerodrome is unfortunately like getting a lot of traction with these extremely liberal monetary practices with their tokens, but that's fine. LPs are moving for that direction. But yeah, we don't have a fee switch in Panoptic, but then yeah, maybe it brought back to me. Maybe next iteration will have something that could make it even more straightforward to activate these. It still has to be governance. You don't want to have any random imposter pretending to be the founder of XYZ. But if it's voted on and there's a use case to be made, and yeah, maybe the DAO gets a share of the revenues, then yeah, that seems sensible to me.
Sure. Yeah, and I feel like with V4 hooks now too, that kind of opens up those possibilities at the protocol level if they want to implement those types of hooks for their particular LP pool.
Is there a fee switch like conduit in V4? I'm not super familiar. Or can you do it all in hooks without asking for permission?
So I think there's some like no-op hooks essentially. So you can essentially charge fees without the fee switch essentially. That would go back to your protocol. So I think there's a few different protocols out there that are implementing those, and that's how they're getting their revenue streams essentially for their activity in LPs.
So if you're listening to this, I think if you want to increase revenues and it has to make sense. Like if you're a tokenized, I mean, even if you have a tokenized item, you may use this revenue to incentivize to some extent, but the source of revenue, the more trading there is, the more you get, the more activity, the more demand helps you. So yeah, I don't know. Seems like tokens are a product unto themselves sometimes with some teams. So pumping the tokens, getting some of it back, maybe.
They are their own product in themselves, and they can be a beast to maintain and work with. And especially like the protocol own liquidity too. That's an asset that you want to leverage and use. So yeah.
All right. Let me drop a bomb on you. So the protocols, they should not be, I think, be actively managing their liquidity. Like you create a lending protocol, like LPing options. It's actually pretty like outside of your area of expertise. And if you have a different type of protocol, it could be NFT, any tokenized asset. It's hard to market make and to be an LP. It should not be like a team. So yeah, protocol owned liquidity, hire someone to do this. One thing that Panoptic does is that we've constructed a lending protocol inside of Panoptic. So when people come in, they deposit some funds, and these funds can now be borrowed by LPs. And this is how we allow people to access leverage. So if I deposit a bunch of ETH and not even do any options trading in Panoptic, I can get a yield because this is like any lending protocol. You don't go out and buy a mansion in the real world. You just LP with it, but you pay an interest rate that goes to the depositors. But if you're a team or protocol, you can print 5% of your token supply and park it in Panoptic. And now it's liquidity available for traders. You can now move that liquidity in Uniswap. You can borrow for a fee. The team will earn some revenues, but you can now move that liquidity in Uniswap. You can be a market maker and access 2x leverage and be maybe coming with your own ETH. You borrow the token side. You don't have as much exposure maybe as a real LP. And that's another way to folks in UniV2 in the UniV2 era would burn the LP token and have perpetual liquidity. You can do a similar thing where you deposit into Panoptic, but you burn the deposit tokens. So you can never withdraw this, or maybe you can collect. But at the end of the day, you can now have liquidity that's perpetually available, not locked in a range or not locked for a range, but available to be moved and be traded with in a way.
Have you seen more and more protocols start to do this?
No one is maybe brave enough. I don't know. Some meme coins. I think there should be a meme coin launcher that deploys that liquidity into a Panoptic, so that you have options as opposed options and meme coin trading when you graduate whatever Pump.fund instead of just not. We wouldn't talk about the Clanker team, but yeah, I don't think the again, maybe the Panoptic token will be a pioneer in that front, but it makes a lot of sense, if you ask me, for the use case of the token itself.
Yeah, I feel like there could be a good collab with Launch or some of those different V4 hook launch pads.
I spoke with them at Denver. They had a slight hiccup where the fees was like not explicitly reported in the Uniswap pool, and then that meant that our job was going to be a bit harder to fetch those fees out. It could still be doable, but yeah, no, definitely the meme coins, celebrity coins, everything is tired. Maybe options on meme coins is the next wave. Who knows?
What do you believe is the core purpose of the fee switch in Uniswap governance as a whole?
Yeah, I think the Uniswap Labs and Foundation are two entities. Labs is creating the front end, the contracts. They turn on a interface fee, and that's fine. It's in the meat space world. People log into their computer, they access this website, another website, they have a choice. But that is how revenues from the interface goes to the labs team, and a lot of revenue for them, and I'm glad for them. So that's one aspect. But yes, everything is on chain, everything that is related to trading activity has to flow to maybe the foundation or the token holders. And the fee switch hasn't been turned on, so we don't know the impact. But that is one source of revenue that, again, labs should not touch the same way that foundation doesn't touch the interface fee if they don't want to. And my view is that the even the fee switch, you go to clearing, Uniswap is like a clearing house. You go to the DTCC or these clearing houses, which clear like trillions of dollars worth of stocks every day. They have a membership model. Market makers, large banks can get discounted fees, pay almost nothing per trade because they trade so often, whereas retail pays a lot more. So there's a tiered approach. The clearinghouse has member, it has revenues, they have fee share. That is how Robinhood retail users, to some extent, again, forget about per order flow, but they subsidize that DTCC clearinghouse operations that the power users can now trade at a fraction of a penny each. And that could be how we also target more fee insensitive retail to help the active and sophisticated participant to be more efficient in their trading.
Do you see a future where a team like Uniswap Labs would ever offer a subscription model for, a monthly fee where a certain wallet can trade without paying any fees?
This is how, again, DTCC and OCC Options Clearing Corporation, they have this similar thing. You pay a yearly fee to be able to trade with this enlarged fee tier, and you get some of it back. It's a weird system, but one thing that I haven't seen a lot discussed, but if you go to REI or some co-ops, it's a similar thing. You pay a membership, you get some returns. It's like a DAO to some extent. Very, very socialist for sure. But DTCC works the same way. You pay a fee. This allows you, like Costco as well. You pay a fee, you access a higher level of product efficiency, better access through the collective bargaining, and you get what you came in for free or cheaply, and you get maybe some returns in terms of yearly dividends. I don't know.
You get unlimited access to $1.50 hot dogs, most importantly.
This is worth they should increase it, but yeah, is it $150? Me and my wife go to Costco way too often, but yes, it is a steal. But yes, the hot dog for sure.
It really is.
Yes.
Well, if you had one wish for Uniswap protocol, Uniswap DAO over the next 12 months, what would that wish be?
Have and this is a bit self-serving. On the Uniswap interface, have a options tab, and that options tab brings you to Panoptic. But this is what I want to see. But yeah, I think the one thing that I don't know if it is still on people's radar, but Coinbase launched this verified pool hook. You can have the big boys play at the table if you frame your hook. If people want to have KYC, yes, of course, give them KYC. retail will complain, but otherwise they won't trade there. What I want to see for Uniswap and Uniswap DAO and Uniswap more generally is to compete head to head with a lot of those extremely liquid, extremely traded venues. Could be NASDAQ, could be New York Stock Exchange, but for DeFi-native or on-chain native assets. I don't think we'll have Tesla stocks tokenized, but we'll have the next 25 companies that will IPO will do it on maybe Uniswap, maybe on-chain, but all your C20s type of thing. And I want to have the Uniswap verified pool. Hook is one step toward that, but have this be kind of the next iteration. Again, retail, even though you speak with your friends that might have bought some cryptocurrencies over the next few years, they're burnt. They won't come back. Or at least if they do, it has to go up 10x more. It's the institutions, the big players that will validate maybe the value prop of decentralization in a way that you have a chain with a single sequencer or like a extremely centralized approach, then you won't be able to compete with Uniswap and Ethereum in any way.
I definitely am supportive of that vision. Absolutely.
We can do options on it too. So lending options, it's like prime brokerage. Maybe that's the same thing.
Yeah.
Maybe Uniswap has to morph into something like a prime broker, which is not just swapping, but swapping, margining, options trading, all of that in one place. And your capital is extremely efficiently deployed as opposed to being kind of scattered around 25 different protocols.
Where is the best place for people to follow your work and all the cool things you guys are doing?
Yeah, sure. So I'm on Twitter. This is mostly where I post. So yes, at Guil_Lambert on Twitter. There's also, or X, there's also Panoptic_XYZ. App.panoptic.xyz is our app. Even if we block US users, unfortunately, but we allow you to see and kind of interact and even create mock positions. You can see how it feels. And again, hopefully that's going to be something we can offer as well. Again, we want to be compliant, but the experience again.
That should be a call to action for every DeFi protocol. Should at least let you see what's going on. You know, you don't need to be able to connect a wallet or anything, but if in a sanctioned nation, then you should be able to see what this all is and the promise of it and how it works. I think that's very fair. So thanks for doing that. That's cool.
Yeah, again, Deribit, they block US users, but they open up their interface. I can see the pricing. I can actually see same option on Panoptic versus Deribit. What does it look like? So it is, yes, definitely, more openness. You cannot hide it to some extent. Someone could write a clone or allow them to access the same information as us, and we have no control, so might as well make.
Well, Guillaume, this has been a pleasure. Really, really appreciate you.
For sure.
Thanks so much,
awesome.
That's a wrap of another episode of the Ungovernable Podcast. Thanks again, Guillaume. That was quite a journey, and I definitely learned a lot myself. For our listeners, please do not forget to follow us on Twitter at GrowUniswap and on Spotify and YouTube as well, dropping new episodes every single week. This was the Ungovernable Podcast. Thank you again, everybody, for joining. We will see you next week.
This was the Ungovernable Podcast by Alpha Growth. Watch all our episodes on YouTube or Spotify or weekly live on X.